Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China State Construction International Holdings Limited, latest report. China State Construction International Holdings Limited is a diversified investment holding company that provides a wide range of construction-related services and businesses. The company's primary focus is on the construction business for both private and public sectors in Hong Kong, mainland China, Macau, and internationally. The company invests in and constructs various types of infrastructure projects, including toll roads and bridges, houses, buildings, hospitals, and schools. It also undertakes civil engineering projects, mechanical and electrical engineering works, foundation engineering works, general contracting, prefabricated construction, and industrial plant reconstruction activities. In addition to its construction business, the company provides a range of services, including insurance brokerage, project and construction management, subcontracting, project consultancy, installation repairs and maintenance, curtain wall design and installation, aluminum window manufacturing, and sales of construction materials. The company also engages in marine engineering works, property investment and management, infrastructure operation and investment, thermoelectricity generation, toll road operation, property development, and facade contracting. Furthermore, the company has diversified its business to include the manufacture and sale of precast structures, building integrated photovoltaics curtain walls, and other related products. It also generates and supplies heat and electricity, leases plant and machinery, holds trademarks, and issues guaranteed notes. With a presence in multiple countries and a wide range of services and businesses, China State Construction International Holdings Limited is a significant player in the construction industry. China State Construction International Holdings Limited maintains a market capitalization of $48 billion, broadly in line with the industry peer group. China State Construction International Holdings Limited trades at a lower price-to-earnings ratio of 5 times and a lower price-to-book ratio of 0.59 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 72% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 6.28%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, technology business revenue has been a significant contributor to growth, with notable projects such as the Tseung Kwan O desalination plant and the Sha Tin sewage treatment works relocation project. Additionally, newly signed projects have also played a crucial role, with 189 items worth RMB 170.214 billion in attributable contract value. The company's expansion of MiC technology and development of emerging technologies such as MEP, BIPV, and high-end facade systems have also driven revenue growth. Furthermore, environmental infrastructure projects and innovative technologies have contributed to the increase in revenue. The application of technologies like BIM, IoT, and AI has refined management and optimized resource allocation, leading to improved efficiency and cost control. The company's digital transformation efforts have also enhanced capital control capabilities, improved procurement efficiency, and cost control capabilities, further driving revenue growth. Overall, these factors have collectively contributed to the company's revenue growth, with technology business revenue being a significant driver. The analysis reveals that certain regions and segments have shown impressive performance. In Zhuhai, waste treatment facilities, and modular construction production bases have been successful. Hong Kong has also excelled in modular construction production bases and projects. The Guangdong-Hong Kong-Macau Greater Bay Area has made significant strides in major infrastructure development. On the other hand, there is no mention of any region or segment performing poorly. Macau's performance remains unclear due to a lack of explicit information. Management is emphasizing a forward-thinking approach that prioritizes sustainability. The company aims to lead the trend in sustainability, achieve dual carbon goals through systemic transformation and innovation, and maintain a leading position in sustainability by formulating policies and overseeing implementation. A key aspect of this strategy is accelerating the development of new industries and building a corporate management system with characteristics that drive digital, intelligent, and green transformation. This includes embedding sustainability concepts into business operations, actively fulfilling corporate social responsibility through clear policies and guidelines, and enhancing project efficiency and safety standards through digital platforms. The company also prioritizes employee development, safety, quality, and sustainability, while strengthening cooperation with other enterprises and organizations to achieve win-win cooperation. Furthermore, management is focusing on reducing carbon footprint, engaging third-party verification for greenhouse gas data, and supporting small and medium-sized subcontractors in supply chain management. Overall, the company's strategy emphasizes a commitment to sustainability, innovation, and social responsibility, positioning itself as a leader in the industry while contributing to the community through initiatives such as the Strive and Rise program. There are no notable acquisitions or divestitures reported in this summary. The absence of any significant transactions suggests that the company has maintained a stable and consistent business strategy without making any major changes through mergers or sales of assets. This stability can be seen as a positive aspect, indicating a well-planned and executed business approach. Concerns about inventory buildup or supply chain disruption are prevalent in various industries. Geopolitical volatility and shortages of skilled labor contribute to uncertainty limiting expansion, page 19. Additionally, production is hindered by water resource shortages, energy disruptions, infrastructure damage, fluctuating climate policies, and uncertain carbon pricing mechanisms, page 75. Supply chain bottlenecks, technological uncertainty, quality consistency issues, and procurement premiums also pose challenges, page 92. Furthermore, material environmental risks can lead to supply chain disruption, as seen in the termination of a supplier's engagement, page 213. These concerns highlight the complexities and potential vulnerabilities within global supply chains. That concludes the financial summary for China State Construction International Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.